Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Tuesday, March 31st, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were down 1.6% on the S&P 500. What we're looking at here is a one-day, one-minute chart. Each candlestick represents 1 minute of trading in the S&P 500. And as you can see, we had kind of a volatile session here. The dotted line is where we closed yesterday, so anything under that is negative, and anything above that means that at that point of the day we were positive. So you can see here where we opened up and then kind of traded down and tried to, we got positive a few times during the day and kind of peaked and tested this area just a little bit above 2640. You can see the high of the day was 2641.39, so that would be in this area here. But as you can see, we got rejected and couldn't hold that. And as the day wore on, we sold off and closed near the lows of the session right here, again closing at 2584.59. Now, when we move over to a daily chart, so each candlestick now represents 1 day of trading on the S&P 500, and we're going to stay focused just on this last month. This is a 1 month time period. What we can see here is the two blue annotated lines that we've been working with, the 2350 level, which has been acting as our area of support, and then this 2600 level, which has been acting as an area of resistance. And you can see that a lot of the trading over the last couple of weeks has been in this area. Now, obviously today we closed beneath this 2600 level. But the other thing I want to point out here is that we've only had 3 closes above the 2600 level over the last couple of weeks. And when I look at this, and a lot of people are saying we bottomed here on March 23rd. But guys, as an investor and trader, and as a technician, when I look at a chart pattern where I see each successive close here, these highs, each successive one is lower than the next one, that to me is not a bullish pattern, okay? So, none of us, myself included, none of us have the ability to predict the future, okay? But this to me is not, a series of lower highs. That is not, in my opinion, a bullish pattern, okay? So, and remember that this 3-day rally here coming off the bottom was on trillions of stimulus by the U.S. government. And then there's been other central bankers around the world, other governments around the world that have also thrown trillions at the global markets here. And guys, and I'll point out a video on my YouTube channel here in just a couple of minutes that you'll want to watch, a couple of videos, but one in particular about how large $1 trillion is, because I don't think most people realize just how big that number is. So I do have a video out there that addresses that. But just keep in mind here that this 3-day rally came on the back of quarterly rebalancing, which we talked about yesterday. So as the stocks have fallen off, right, equities have fallen off, and you get to this quarterly rebalancing, anybody that had a 60-40, 70-30 type portfolio or an age-based portfolio, you get these quarterly rebalancings where money will come out of bonds into stocks, especially in a situation like this where stocks have sold off over the last month, okay? So that will create an increase in volume going into the stock side of things. But today being the last day of the quarter, it'll be interesting to see over the next couple of weeks, do we continue to roll over here? Okay. And that's kind of where I'm going with this is, this isn't necessarily a real positive. Okay. And even just looking at these last, days, we're seeing kind of a consolidation here. Now, could we break out to the upside? Absolutely we could. But guys, there's so many things going against this that I don't know that makes a ton of sense. Okay. In technical work and charting in the stock market, I have found over the decades of doing this that there are no absolutes. The way I approach things, and I've learned to do this over the years, is with an if this, then that scenario. so far, right, we're kind of being rejected at this 2600 level. And this, by the way, is a 7-year weekly chart. We've been using this for quite a while. And again, I have the 2350 and the 2600 levels annotated here with these blue lines. And you can see here over the last few years, starting back in 2017, that this 2600 level has been very important. It's been acting as an area of support, especially through most of 2018, as we see here. And again, right now, right, is it's kind of acting as an overhead resistance point on these weekly candlesticks. And as we know, prior support becomes resistance once penetrated in either direction. So it was support here above us, but now that we're stuck beneath it, this 2600 level is acting as resistance, right? We're having a hard time on these weekly candles, and we've poked our head above it with the with the wicks, but we have not been able to close on a weekly close. We haven't been able to close above this 2600 level. So if the markets roll over and go to the downside, again, I want you guys to understand that I expect us to probably come down to this 2000 level, plus or minus 100 to 125 points. And again, that's if the markets continue to roll over. Again, on today's pattern, it's not overly bullish, right? And we've only had a few positive days here over the last week. So if we continue to see weakness in the markets along with a higher coronavirus count, it's spreading very rapidly throughout the world, including here in the United States where I'm at. And, so that's going to continue to weigh on the markets. Of course, there's problems in the oil markets. There's problems in the bond market. So we've got a lot going against us right here, guys. So, it's not a real positive environment. All right. So if the markets continue to roll over, this 2350 level, of course, has to hold up. 2350 is important for a couple of reasons. Number one, it was where we bottomed at the end of 2018 when we had that very quick V-shaped bottom there. But also, the first time we got above this was back in 2017, first part of 2017 there, Q1, and then we had some trading around there for a few weeks in 2017. So there is some support right here at this 2350 level. And of course, we got down below the 2350 level for just a brief couple of days during this bear market so far. But make no mistake about it, we are in a bear market, and what we're experiencing or have experienced over the last few days is a bear market rally. The question becomes, does it continue, and can we start to close above this 2600 level, especially on the weekly charts, or will we roll over and go lower? And if we break the 2350 to the downside, then the next major area of support is going to be starting at 2100 down into the 1900 level. Again, you can see from about mid-2014 to mid-2016, we traded between 1900 and 2100 on the S&P 500. And so the middle line here, 2000, is the middle point of that. So I personally expect us, if we roll over and if the 2350 level does not hold, I think it just makes a lot of sense that we would end up somewhere down in this area, okay? So caution is advised, especially if these markets continue to roll over. Now, continuing on with the theme that we've had over the last couple of sessions, we're looking at other charts than just the S&P 500. And on Friday, we looked at the Russell 2000, and then yesterday on Monday, we looked at the MSCI World ex-US Index chart. And my goal here is to share with you guys that there's been a lot of weakness, especially outside the U.S., for many years. And I think a lot of people think that this market and the global market and the global economy is stronger than what it really is, okay? So what we can see here is this is a monthly chart going clear back to 2004. What we're looking at here is the FXI. This is an ETF that tracks 50 large cap companies in China that trade on the Hong Kong exchange, okay? So these are basically 50 large cap Chinese companies. It's going to be representative of a lot of the business in China and the strength of their stock market. And I drew this blue line at the 36 level on this chart just to kind of give us something to look at. And we closed at 36.10, okay? So we're pretty much right there. But at this 36 level, what we can see is that we are now trading pretty much at the same level we were back in 2007. Okay, you can see it here. All right. So again, chart goes clear back to 04, which is the inception of this product, this ETF, the FXI. And you can see at this 36 level, we first traded up to that level back in 2007. And you can see that, we pretty much have went sideways, right, for the most part since 2007. And this chart, right, the FXI peaked in 2007, and we've never retaken that peak. And the next highest peak on this chart, as you can see, is at the end of 2017, beginning of 2018 right here. And over the last couple of years, you can see that this is backslid. So my point in showing you this is that we've had weakness in the global markets, and I'm going to continue to try to find more and more of these charts to show this to you. But the things that have really worked over the last couple of years, guys, has been the U.S. large caps. All right, the small caps have been weak. The international, a lot of the international stuff has been weak. The global charts have been weak. In some cases for a decade or longer, as we saw yesterday on the MSCI World ex-US Index chart. And by the way, if you didn't see that, or if you want to review it, just go out to my YouTube channel. Just put Rodney E. Constable in the search box on YouTube and click the search button there and go out to my channel. And that was yesterday, March 30th, where we looked at not only the S&P 500, but we looked at the MSCI World ex-US Index chart. And then on Friday, the 27th, we looked at the Russell 2000. So every day I'm going to try to find another chart like this, just so we're looking at not only the U.S., but we're looking kind of over the last decade or so what's been going on around the world, so we can paint that picture so everybody understands that I think these markets have been weaker than most people realize. And also, how much is a trillion? I've got this video out there on my YouTube channel, very educational. So for those people that don't really fully realize what a trillion is, guys, it's a staggering sum of money. So I think all of us as investors, as traders, as finance people, we need to understand just how big that number is. And also, if any of you guys are curious about my background, and I want you to understand that I'm not just some guy with a charting service and a YouTube channel, okay? I have an extensive background in financial services and trading. And so I would encourage you to go out here and watch this video that talks about my background. It's 3 minutes long, but I would really, really encourage all of you, because I want you to understand, guys, that I'm bringing the best information that I can to you. And I've got an extensive background here, okay? So I'm not trying to toot my own horn, but the facts are the facts. And I try to bring you the most rock-solid data every day in every chart, okay? Both on my YouTube videos and, of course, with Simple Market Signals, my weekly newsletter, where I do have my proprietary market signals. Again, I developed Simple Market Signals myself, and then after I realized what I had, I knew I could help a lot of people, so I built a business around it. And along those lines, I had, and most of you guys are so awesome with your comments that you leave on my videos, and I can see how appreciative you are of what I do. And I really, really appreciate that. But once in a while, somebody will take a stab at me, and they'll, try to correct something I said, all right? And look, I am not infallible, but yesterday, one of the comments that somebody left was they were saying I didn't know what I was talking about when I talked about systematic risk, okay? So just so we're all clear, I do know the definition of systematic risk, and let's review this together. Now, we're out on Investopedia, okay? So this isn't me saying this. This is Investopedia. And systematic risk, by the way, is what Simple Market Signals deals with, okay? But there's a couple of things here that I want you guys to really understand, because systematic risk, let's read this together. Systematic risk refers to the risk inherent to the entire market or the market segment. Systematic, not systemic, as this guy was trying to correct me, okay? He was wrong, not me, but systematic risk is also known as undiversifiable risk, volatility or market risk. It's all the same thing. So whether you're saying volatility, market risk, systematic risk, it's basically the same thing. It's different ways of saying the same thing, all right? But you can't diversify that away. So, and this goes back to, people over the years, you got to be diversified internationally, right? You have to own international stocks or whatever. And I'm not denigrating diversification, guys. Again, go back and look at my financial services background. You're going to realize that I'm going to be the last guy that's going to denigrate diversification. But I also want everybody to understand what diversification does and does not do, okay? And diversification does not reduce systematic risk. Not systemic, systematic, okay? Systematic risk is the market risk. It's volatility, okay? But this is where And this is why I developed this model, that I call Simple Market Signals, for myself. I worked on it for over 20 years. The final piece of the puzzle came together for me in 2017. And then after I worked with it for a few months, I was like, man, being a former financial advisor myself and a former VP of a major mutual fund company and everything, that you're going to find all that in my in my background video. But I looked at this and I'm like, man, I can help a lot of people with this. Okay, so how do I build a business around it? And it just made sense to me to, keep the price as low as I could. That's why it's under $20 a month. And then, all right, how do I deliver the information? Well, a weekly newsletter. All right, so that's kind of the genesis of how all this, the Simple Market Signals, came to be. But I want everybody to understand that systematic risk is non-diversifiable. Okay, so it's the whole market, and what we're dealing with here, guys, this is a systematic risk event, okay? Systematic risk event. You can't diversify yourself away from this. Owning international equities when the entire system goes down does not help you. And unfortunately, bond yields now, because historically you use treasuries, right, high-quality bonds to offset equity risk. That's kind of how you used to be able to diversify yourself and deal with some of this systematic risk. But bond yields are so low these days, guys, that it's just not going to work like it used to. And so again, and I am not trying to just get you to sign up for my service. I'm trying to tell you how I can help you with Simple Market Signals, because Simple Market Signals is like risk radar for the stock market. And if we understand that there's extra, right, if we understand the level of systematic risk in the system, and that's what Simple Market Signals does, it measures systematic risk. And if we understand the risk that's in the system at this time, and you can't see that by just looking at charts, okay? Looking at I love technical analysis, which I think you guys can see that. But the problem with just looking at price action is it doesn't tell you what the level of risk is in the markets. And that's where you have to go deeper. And that's where what my model does. And I'm going to tee up some more information at the end of the video to give you more texture on that. But I just want everybody to understand, whether you choose to work with me or not is up to you. But I think it's important because I want everybody that's associated with me, I want you guys to be the most knowledgeable, the smartest, the best investors and traders on the planet, okay? And I'm trying to bring you everything I can every day to help with that. But one of the things we all need to understand is the vocabulary and what it really means. And because sometimes there's just little subtle differences between these terms. And systematic risk is market risk. It's undiversifiable, okay? That's not me saying that. It's Investopedia. It's undiversifiable. You can diversify yourself silly and you cannot get rid of systematic risk, okay? So that is why I'm so passionate about what I do, because when you get into these types of events, these systematic risk events, I haven't found anything better than the system that I developed for myself to being able to help identify what level of systematic risk is out there, which allows me then to lighten up on my equity positions, because going to bonds just doesn't work like it used to. Okay, so anyway, not to beat that to death, there'll be some more information teed up at the end of this video. But I just wanted to, number one, thank you guys that leave positive comments. Thank you so much. But again, I hope this was helpful to kind of review what systematic risk means, because it's one of those little terms that doesn't really get used all that often, but I think it's super important for all of us to understand what that really means. And also, if you haven't yet subscribed, please go out to my YouTube channel and subscribe, and check out some of my other videos, including the last two that I put out. If you want to review those other charts that we just talked about, how much is a trillion, why losses matter, super important as well. And of course, if you want to find out more about my background, it's right there in the on my YouTube channel, and I will leave a link to most of these videos that I just talked about. I'll leave a link to most of those in the description box below this video. Thank you very much, and now I'll tee up a little bit more information for you.